On January 8th, 2026, the bears absolutely took over Dalal Street. I mean, after 3 days of losses, the market didn't just dip, it completely plunged. And investors everywhere were left asking one simple question. What on earth just happened? So let's dive in and unpack the real story behind this massive sell-off.
Wow, this was the big scary number flashing across everyone's screens. The BSE Sensex dropped a staggering 780 points in just one session. It was absolutely brutal. The Nifty 50 also shed over 260 points, closing below that really crucial 25,900 mark. But a number is just a number, right? What does this actually mean?
Well, for starters, this wasn't just some minor blip on the radar. Nope. This was the single biggest drop the market had seen in more than 4 months. And get this. In just 4 trading sessions, investors watched over 9 lakh crore get wiped from the BSE's market cap. That was a loud and clear signal that market sentiment had turned sour, and it happened fast.
To really get a feel for how severe this was, we've got to look beyond just the main index numbers, because this wasn't a surgical strike on a few stocks. It was more like a tidal wave of selling that washed over the entire market. So let's see just how deep these cuts really were.
The damage was just incredibly widespread. We saw heavy selling pretty much across the board. The metal sector, it got hit the hardest, plummeting over 3.4%. But other heavyweights like IT and energy weren't spared either, both dropping well over 2%. Actually, every single sectoral index on the BSE ended the day in the red. There was literally nowhere to hide.
And, this wasn't just a problem for the big blue-chip companies. The pain was felt all the way down the line. The broader BSE mid-cap and small-cap indices, the ones that track the smaller and medium-sized companies, both fell sharply by 2%. That tells you the negative feeling was everywhere, affecting the whole market ecosystem.
To really understand how lopsided the selling was, we need to talk about something called market breadth. It sounds technical, but it's actually super simple. It's just a head count. How many stocks went up versus how many went down. In a healthy market, you've got a decent balance. But on January 8th, that balance was totally skewed.
And these numbers right here tell the whole story. Out of the 500 stocks in the BSE 500 index, just 40, only 40, managed to end the day with any gains. A whopping 460 stocks went down. That is just a tidal wave of selling pressure across the entire market.
So, the big question, why the sudden panic? What could possibly trigger such a massive sell-off? Well, it wasn't just one single thing. It was more like a potent cocktail of worries, both at home and from around the world, that all came together at once to really spook investors. Let's break down the ingredients.
You could say it was the perfect storm. You had foreign institutional investors, the FIIs, consistently pulling money out. Then you add in growing fears about potential U.S. tariffs and some simmering geopolitical tensions. Top that off with weak signals from global markets and heavy selling in some of India's biggest stocks, and boom. You've got the recipe for a major correction.
Now this is where it gets really fascinating. Check out this quote from Dr. V.K. Vijayakumar. He points out this really strange disconnect that's happening. On one hand, India's economy is looking incredibly strong, with GDP growth projected at an impressive 7.4%. But on the other hand, the stock market is getting dragged down by outside forces, like this continuous selling from FIIs. It's a classic battle, strong fundamentals versus weak sentiment.
It's so important to remember that markets don't exist in a bubble. And the sell-off on Dalal Street, it was actually part of a much bigger global story. So let's zoom out for a second and take a look at the worldwide picture.
Yeah, this anxiety was definitely global. Markets all across Asia, from China to the wider regional index, were down. Europe's main index was in the red, and even the futures for the US S&P 500 were pointing to a weak open. This global risk-off mood just poured gasoline on the fire right here in India.
But hey, even in a sea of red, you can always find a few little islands of green, right? And of course, on the flip side, some stocks just get hit way harder than others. These outliers, they often have their own unique stories that have nothing to do with the broader market.
Just take a look at these two extremes. On one side, you've got Balaji Amines, which just surged over 14%. Why? Simple. Positive company-specific news about a subsidy. Meanwhile, BHEL absolutely plunged 10% because of a report that the government might lift some restrictions on Chinese firms, which could mean more competition. It just goes to show how specific news can make a stock completely defy the market's trend. All right, so after a brutal day like that, the million-dollar question on every single investor's mind is, what happens next? Is this the start of an even deeper correction,
Or is this actually a chance to buy? Let's take a look at what the experts are watching now.
Okay, so if we pull up the chart here, we can see what the technical analysts are looking at. They're pointing to an immediate support level right around 25,700. If the market keeps falling, a lot of people are eyeing that 25,000 to 25,500 zone as a potential buy on dips opportunity. So these are the key levels traders have their eyes glued on.
But charts only tell part of the story. The next real test for the market, it's just around the corner. The third quarter earnings season is kicking off, and the results from our biggest companies could be the one thing that finally breaks the spell of negative sentiment.
And we've got some heavy hitters reporting right out of the gate. First up is Avenue Supermarts, which runs DMart on January 10th. And then, the big one for the whole IT sector, TCS, reports on January 12th. How these major companies have performed will give us some really important clues about the health of the economy and could set the tone for the market's next move. So, here we are with the market at a critical crossroads. On one side, you have India's strong economic fundamentals. On the other, a wave of global uncertainty and fear. The bears have definitely landed a heavy blow, and now all eyes are on corporate earnings. The big question is, will they be strong enough to fight back and finally calm these markets? We are definitely going to be watching closely.